Welcome back everyone to the Money Control live stream. It finally looks like we are going to end the winning streak on the Dalal Street, although it seems more like a pause, Santo, than a breakdown. If you look at the Nifty and Sensex, they look like they might be able to break the 7-day winning streak, although at this point of time the Nifty has just turned into the green territory, but the sustainability of that just seems a bit questionable at this point of time. And Santo, if you look at it globally, is the US dollar index clearly, which is weighing on emerging market equities. The dollar index has made a comeback from about 105.4 levels to about 106.8 levels as of today. But I think the story lies in the broader market. There, I don't think we are seeing any sort of weakness. The small and mid cap indices have been mostly in the green throughout the session, and clearly that is what is helping the market breadth as well.
Well, at this point, the bulls are just unstoppable, CJ. No news is bad news for them. And as they say, bull markets always climb a wall of worry.
Yes.
That's what we are seeing right now at this point in time. Now, some bit of profit taking does seem inevitable given that we have seen such a strong run at this point. But the fact also remains that there's a lot of money waiting on the sidelines.
Yeah.
Probably that is what is not allowing the markets to correct. Every time prices come off a little bit, I think it's again that FOMO spirit you're seeing right now.
Yeah, we talked about that factor. I think that FOMO factor has again come back.
Investors saying that I'm getting something 5% cheaper than, let's say, 2 days back, and I would like to buy it. So probably you're seeing that kind of...
It's almost mid-2020s, 2021 all over again. Yeah, it seems like
that. How long this can pull on, one doesn't know. But my bet is that maybe you'll see the market climb higher in the short term before a deeper correction.
Well, Santo, I think while the market was clearly quite lackluster today in trading, individual stocks were quite active. I mean, we have almost 5 stocks that we culled out from almost 500 out there, more than that. But clearly, Santo, your first pick is the interesting one.
Well, SBI Cards, now the stock had a good run over the last few weeks, but suddenly with the RBI bringing up the merchant discount rate issue again, that's one of the points of discussion in the paper that the Reserve Bank had floated. I think maybe you've seen the near-term top for the stock. Now, at this point, it's not a given that RBI might come out with any drastic measure on the merchant discount rate, which is very key to any credit card company's earnings. In fact, most analysts tracking the company, even those which have been bearish on SBI Cards, pointed out that the RBI was unlikely to come out with any stringent cap. And the fact that they have not even mentioned the cap is being seen as a positive. But look at the other side of the story, CJ. One is, of course, the competitive intensity, that's the case with most sectors, but more importantly, you've seen card spends fall by about 4% in June for the industry as a whole, and for SBI Cards itself, it's come off 11% month on month. That apart, there are hopes. I think the bull case for SBI Card is that the share of its revolver credit, which is its consumers pushing forward or postponing
or paying just the minimum
amount, right? So that, yes, it sounds good on paper, but according to CLSA, that's unlikely to happen at a time when rates are rising. So that definitely will have a dampener on the revolver portion of SBI's book. CLSA is among the brokerages which are bearish on the stock. I wouldn't say that you can see the stock come off very sharply, but till the uncertainty over MDR subsides, CJ, I would think that the market is likely to go a little cautious and in fact look for sure short stories.
Possibly, Santo, but I feel that today's almost 4% cut on the stock seems a little unjustified to me. It seems like the market is getting ahead of itself, probably on the entire MDR issue, because if you look at the discussion paper, all that the RBI has done is just asked question of the public in terms of what is possible, whether they should regulate MDR, whether they should not intervene in MDR, how MDR is set, whether they should regulate MDR and both interchange fee. I think so. Therefore, I think we will have to wait and see before jumping to conclusion in terms of whether this will be a negative or a positive for SBI Cards, because clearly so far the industry has worked well. I don't think there has been too much concern with respect to MDR rates. Yes, there have been some voices here and there, but generally the credit card system has worked quite well so far. So sometimes they say, why change something that has not broken? And so let's see how the RBI handles that issue. And so far, the lack of recommendation for me, I think, and that is something that you also pointed out, the lack of recommendation from the RBI on the MDR issue seems non-adversarial. It seems like RBI doesn't want to take a confrontational position with respect to the MDR issue. And lastly, I think overall, yes, a lot of the now upside will depend when the clarity emerges on the MDR issue. But overall, the longer term story for SBI Cards clearly remains there, because this is an underpenetrated story. The credit card market in India is still a very underpenetrated market. It's still a very metro limited market, and the growth runway therefore is quite strong and quite high. So I don't expect long term investors to be too worried about this. The next stock on my radar today is from the retail space, and that is Avenue Supermarts. The stock was among the gainers today in the market after reports came out that the company is looking to treble its store count, actually more than treble its store count. At this point of time, DMart has about 300 stores, and it's looking to open more than 1200 to 1500 stores going ahead in the next 5 to 10 years. So clearly, Santo, I think DMart has realized that they need to step up investments to gain more market share out there, or else it will be left behind by the likes of Reliance Retail. Now, why I think market would probably appreciate this, Santo, is the fact that in a high inflationary environment, generally consumers will tend to go towards discount stores. We saw that in the June quarter earnings of the company. The management also was quite bullish that inflation for them is actually a good thing. It's not really a bad thing, because then consumers tend to purchase items in bigger quantities, and because they have higher discounts. So clearly, DMart has realized that if inflation is going to remain higher or high-ish going ahead in the next few years, then it makes sense to take advantage of that and expand its network. Also, mind you, it's not that just DMart is only looking to expand the physical stores. They're also looking to expand its e-commerce business as well by opening up probably 2 more fulfillment centers going ahead. So clearly, I think the two-pronged strategy is something that overall market should like.
Well, CJ, hard to argue against the stock at this point in time, and we are seeing a similar trend in the US also. In fact, Walmart has said that a lot of affluent consumers have also started buying at Walmart because of high inflation, and that's what led to a beat in their latest quarterly
and that is what happens usually, during high inflation periods. People who are richer would tend to buy in bulk or in wholesale, because they would feel that prices might increase going ahead, so why not buy ahead?
But remember, there's also a flip side that's also led to margin pressure at Walmart, so it comes with some side effects as well. Now, in the case of Avenue Supermarts, the June quarter numbers were quite strong.
Yeah.
The big argument against DMart always has been its premium valuations. But now, if the company is able to show
I knew you were going to come at.
No, but if the company is able to show that kind of growth numbers, then to a large extent, those kind of valuations, I would say in absolute terms, the valuations are still very expensive. But the fact that the company has been able to show very strong growth and maintain its margins, most importantly, it managed to maintain its margins around 9%, which has been consistently doing for the last 3 quarters. You've got your top line growing, which means you got good profits as well. So at this point in time, when the overall mood is bullish, investors wouldn't mind paying that extra premium. Now, it would be a very different case if again suddenly the overall outlook on the market changes, but in a market of this nature, it's very likely that investors are willing to pay that kind of a premium, and you're seeing that in the upswing in the prices.
I think, Santo, I expect DMart to probably go back to the earnings delivery that we saw prior to the pandemic, wherein everybody used to scratch their head, how can a stock be so expensive and still keep on rising? And I think I expect a repeat of the similar situation now that COVID disruptions are behind us.
Well, next stock, Indian Energy Exchange. The stock took a bit of a beating today. Now, according to the latest late payment surcharge rules of the government, it has banned about 13 states from participating on the power exchanges till they clear their dues, outstanding dues to power generation company. That's a big blow, because some of these states account for a good chunk of volumes on IEX. IEX stock had seen a good run up till about December, but you also saw the earnings kind of peak. The top line growth for the December quarter was quite strong, but since then it's slightly been on a downtrend, and you've seen for the June quarter there was a month-on-month clear drop, despite the company saying that volumes were good, demand for power has been very high. Again, if you look at the July volumes also, it were overall volumes were down 1.7% month-on-month. The day ahead market volumes, which is for the power which has to be delivered within a block of the next 24 days. Now, that saw an even sharper dip of about 17%. The clearing rate was down from about 6 odd to 5.41. So, you are seeing clearly a pressure on the financial performance, which is also reflecting in the stock price performance. The stock has not gone anywhere really for the last 3 or 4 months.
True. Santo, I think, yes, of course, if this order goes through, clearly it will be a little concerning given the fact that it almost accounts for 50% of the volume on the exchange, and that could, of course, change the entire dynamics around the company's earnings estimate for a lot of analysts. Remember, the last sheet is quite bullish on the stock. This is one of those overcrowded trade where a lot of analysts have a buy rating on the stock. So clearly that could come under risk. But the only flip side here is that there is a possibility that you can appeal against this change, the order or the rule change. A lot of states can probably compensate by suggesting a payment structure to the government, and maybe that could provide some leeway and allow them to continue to participate on the power in the spot market. That is because let's not forget that power demand at this point of time remains quite high, especially in industrial states like Maharashtra, where you have not only industrial demand but residential demand as well. So clearly at this point of time, states will not want to not be able to participate in the spot market to meet the deficit demand, deficit supply. So I would expect that there would be some reaction out there. And lastly, I think, yes, of course, in the near term, things seem a little murky for IEX after the spectacular rally of 2020 and 2021. But I think longer term story, I think, still remains quite strong, for IEX Santo, because power demand is only going to increase from here on, and you would expect that spot exchanges or the secondary market will become more and more active. And I think that is what the government's ambition is as well. If you look at the electricity bill amendments which have been brought out, that itself is expected to also benefit a company like IEX going ahead. So I would expect the near-term headwinds to be taken care of going ahead, and let's wait and watch what happens with this order. Last stock on my radar, Santo, is actually one of your bullish calls, is Interglobe Aviation. The stock was down today, well after the air traffic data came out for the month of July, and clearly it is a little disheartening because air traffic has fallen 7% on a month-on-month basis in the month of July, which is a bit concerning given the fact that probably this is happening largely because ticket prices are soaring. I mean, if you look at ticket prices in the most busiest sector, which is the Delhi, Bombay or Mumbai, Delhi, their prices have risen almost 60% there. So clearly, high prices are starting to impinge on air travel demand. And I think, Santo, the stock has performed spectacularly over the past 3 months. It has given double-digit returns to investors. But I think this issue now, with investors getting a little wary of where air travel demand will be going ahead, I think this could trigger some profit booking going ahead.
Well, see, I think you need to look at the July numbers a little carefully, because July is not really the month where you see a lot of holiday travel happening. That happens. June typically is the month when you see that. July is, you might see more of business travel than leisure travel. Now we got the festive season coming up, which is where the big bulk of the air traffic is now going to come from. And if you look at overall the aviation sector, they've been really hurting because of rising crude prices. Now there is clearly some relief there. So there is cushion, there is some cushion to the operating margins now that prices have started to come off, which also means that they'll be able to lower the fares. Now the higher fares are partly also to make up for that. The moment they get some relief on the crude oil front, most likely that they're likely to bring the prices down to.
But Santo, it is possible that this relief on crude oil could actually be short-lived if Citigroup is right, because Citigroup has come out with a report earlier today suggesting that people who are expecting Brent crude oil to fall below 90 are out of their place, because they are expecting a resurgence in crude oil prices back to $125 per barrel by mid-2023, because they feel that the market is underappreciating the supply demand dynamics.
Oh, well.
So that is a possibility. I mean, it's only Citi, but who knows? I mean, they could be right.
It's a little strange because, early on Citi was among the few brokerages which had a slightly bearish call.
And I think, Santo, this has to do with the fact that, we talked about in the morning that recession fears in the US are receding. And probably that is why Citi has also gone ahead and changed their call on the oil price. So for me, I think, yes, and you talked about festive demand. Of course, that is something that travel companies, I beg your pardon, aviation companies will be waiting for. Of course, they would expect a sharp uptick. But look at me personally, right? I have to actually travel during that festive season. Maybe 6 months ago, I would have taken an air ticket. But at this point of time, I ended up choosing a railway ticket to make that journey, even though I would have to spend more time, because air tickets are just too expensive, even 2 months far ahead. So clearly, I would expect that there will be more people out there like me who would have to make this sort of a decision, and therefore I'm a little cagey on air travel demand.
Maybe, I don't know, CJ, but probably the airlines know what they are doing. Maybe they want to, given all the fact that there's a lot of crowding happening at the airports as well. Maybe that's one strategy of keeping the price high, because as long as there is a demand up to a certain level,
possibly
they don't really mind. Well, last stock on our watch list today is Exide. This again a steady performer. It's rallied now close to about 30 odd %.
Along with the entire auto
industry.
Yes.
And the reason for the trigger for the renewed interest in the stock is that first quarter numbers were quite decent. The company reported good growth across all its three key segments. There's auto, industrial and exports as well. Besides, it's again a play on the EV segment. The demand for lead acid batteries are going to come down, but that for lithium ion batteries are going to only rise, and according to some brokerages the demand could go up by as much as 300x. That's like a huge opportunity for a player like Exide. Besides, Exide is planning to set up a lithium ion cell manufacturing plant at Karnataka, for which it has already bought the land, and work is likely to start very soon. Now, these are some of the triggers for the stock. Besides, when you also consider the value of its stake in HDFC Life Insurance, then overall valuations look even cheaper. According to Edelweiss, the stock is now available at 8 times expected FY24 earnings. So, you are seeing some bit of renewed interest, which I suspect could sustain. JP Morgan has a price target of about 215 rupees for the stock.
Well, Santo, I think of course there are long term, there is a long term story with Exide with respect to the EV battery transition, and then there is the short term story, which is what people have been talking about, the revival in auto sector volumes. I think that is one story that people need to stop taking for granted at this point of time. A lot of the market is taking the revival in the auto sector as at the cyclical upturn as granted, because they expect that normal monsoon will lead to a rural demand revival, and therefore it will snowball. But if you look at monsoon itself, Nomura came out with a report. Kotak Institutional Equities today came out with a report suggesting that optically monsoon looks normal, but the distribution has been so erratic that this could raise issues with respect to the recovery in rural demand that people are expecting. Only western and southern India have actually gotten extra rainfall, in fact in some cases floods, which have led to crop damage, whereas eastern India has gotten deficit rainfall. So there is a lot of issue with respect to the farm sector, and that is why I'll be a little cautious on the volume recovery, and especially the festive demand in going ahead for the auto industry. So that is point number one. The second point is that replacement market is something that has benefited Exide a lot because of the pent-up demand that we have seen with the reopening of the entire economy in the June quarter and the March quarter earlier before. For me, I think that pent-up demand will peter out from here, and you could see the replacement market demand come back to normalized levels, and therefore the sequential impact could be a little weakening for the company. As far as the EV market is concerned, actually Care Ratings came out with a report earlier, yesterday, and they said that they now expect the demand for EV to be a little less than what the market was pricing in earlier. That is because the decline, the expected decline in prices of battery would probably be slower than what they were expecting. So clearly, I would be a little cautious about the 300x jump in lithium-ion battery demand. Maybe it needs to be taken with a pinch of salt.
Well, and what are we looking forward to? Before that, let's quickly take a quick
Yes, we should take a quick check on the market, I think.
And it's holding pretty well at this point in time.
Yes, Santo, I think we probably will see an 8th consecutive green tick on the benchmark indices today. The Nifty is just up by about 10 points at this juncture, and it's the mid cap and small caps clearly that are outperforming. The Nifty mid cap 100 index is higher by about 0.2%, and similarly for the Nifty small cap index. And surprisingly, Santo, India VIX, which was actually higher by about 2% in the morning, is now down about 2.5%.
Well, and what are the key things that we need to keep an eye out for, CJ?
Well, Santo, there is a lot of Fed commentary coming out. Of course, with the FOMC minutes coming out yesterday, a lot of Fed members will be out there, speaking at public forums, and two of them will be speaking later in the evening. That is Neil Kashkari and George. There are Fed members who will be speaking probably about inflation, about rate hike expectations, and investors will probably watch out for that. And apart from that, of course, in the US, there's an important economic data coming out. That is the July existing home sales data, which is very important with respect to get a feeling for how the housing market is doing in the US, and that is something that the market will also be awaiting.
Well, very interesting, you know, this Fed commentary, it's been constantly changing over the last
Yeah, I know. I
few
mean,
weeks.
they're sometimes trying to, you know, keep the market under their leash, because sometimes the market is trying to get too ahead of itself, and all that the Fed is trying to do all this while, it seems, is just give the market a reality check.
Well, and now the stance has moved from we'll control inflation at any you know, at any cost, and now they are saying that we don't want to
hurt the economy.
Hurt
Yes.
the economy.
Exactly. Exactly. It will be very interesting to see how it develops ahead of the meeting. You know, next month.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks as always for watching, and do let us know what you thought about this show in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m.